Welcome traders, hope you're having a fantastic time wherever you are. I'm back again with yet another amazing video, just as I had promised. So welcome, and make sure to watch this video till the end in order to get the most value out of it, because I'm going to be teaching you guys how to scale in order to get the maximum profit potential on a single price movement. So make sure to watch till the end, and also don't forget to subscribe, like and comment. So without any further ado, let's get straight into the video. So how to scale in for maximum profit potential. So first and foremost, we need to be able to know what scaling in means. So scaling in simply means adding more positions onto an already established trade. So what do I mean by that? So let's say, for example, let's say this is some form of support. Then price comes to this area, and for whatever reason you find an entry opportunity here, taking price higher. So once you find an entry opportunity right here, taking price higher, let's say maybe you put your stop loss right there, then as price is going in your favor, you add more positions onto this particular move. So let's say maybe you could have targeted this area right here. So as price is moving in your favor, you add more and more positions onto this particular trade. So let's say you could have added right there, then you could also have added right there, and also you could have added right there, all the way to your take profit right here. Take profit. So it's just adding more positions onto an already established trade in order to get the maximum profit potential. Okay, so that's what scaling in means. So why do traders scale in? Traders scale in order to maximize profit potential, just as I have said. So let's say, for example, you're a trader and you took this trade, and you normally risk like let's say 2% per trade. Let's say you risk 2% on a trade. So without scaling in, and let's say this is a risk reward of 1:5, then on this particular trade you're going to make like 10% on this single trade. Without scaling in, you'll be able to make like 10% on that particular move. However, if you scale in and add more positions onto that particular trade, instead of making that 10%, you can even make like 14%, 16%, and even up to 20% by just adding more positions onto that trade. So scaling in enables you to make the maximum profit potential onto an already established trade. So in case you have any questions, don't hesitate to ask in the comment section. I'll be more than willing to reply. So that's the reason for scaling in order to maximize profit potential on a single price move. So let's go to the next thing, which is how to scale in. So there are several ways of scaling in. However, the main method of scaling in, I'm just going to use another example. So let's say price is coming lower, and then for some whatever reason, it works with any strategy. You can scale in on any strategy, it doesn't matter. So I'm just going to use this as an example. Okay, so you see price coming down, and then for whatever reason you look for your entry opportunity right here, and let's say you want to target this area right here. So just as I have said, there are so many ways of scaling in. However, my most preferred method of scaling in is through price action. So what do I mean by that? What I mean is that once you enter your trade right here, and then maybe put your stop loss right there, as price is going towards your take profit, it goes while making higher highs and higher lows. So let's say you find an entry opportunity there, then price is going up, forming these higher highs and higher lows, right? So what how you scale in is by waiting for price to form in this case this is a buy, so you wait for price to form higher highs, and then wait for a break of those higher highs. So for example, right here we have this higher high that was formed right here. So immediately price breaks this higher high right here, you enter there, and at that particular point placing your stop loss under the previous higher low right here. This is the higher low right here, so you place your stop loss just below it. Again, this is also another higher high, so when price breaks it, you enter there, placing your stop loss right below the higher low. So that's how you scale in your positions, adding more and more positions onto this particular trade. So again, here it formed another higher high right there, came and broke it. So at this particular point, what you can do is just add your other position right there and place your stop loss right below the higher low. So you keep on doing this until price gets to your take profit level. So in this case, we will immediately price broke there, you add your position there and place your stop loss right there. So in this case, instead of having that one single trade right here, you could have been able to add how many trades? 1, 2, 3, 4 more trades, making the total trades to be 5. So that is how I personally scale in, and also I would recommend that any other trader, that's how I would recommend you to trade, by using price action as price makes higher highs and higher lows. So that is how you scale in. So this is for a buy. Let's go ahead and look for a sell. So it's just the same thing. So let's say for example, price is making higher, price is going up, and then for whatever reason you're looking for sells and maybe targeting this area right here. So you find your opportunity there, place your stop loss right above. Then as price is forming these lower lows, as price breaks them, you add your position there and place your stop loss right above the lower high. So just like that, we have this lower low right here. Price comes and breaks it, enter there, place your stop loss just there above. Again, we have this low right there, price breaks it, enter there and place your stop loss just above it, so until price gets to your target. So this is the case for a downtrend, and this is the case for an uptrend. So that is how you scale in onto a trade. Okay, so let me just show you onto the live example so that you can grasp it a bit more. Here we have the AUD CHF 2-hour chart. So right here we have this downtrend right here, and we also have this trend line right here. So let's say you are looking for an entry after the break of this trend line, and remember, it doesn't have to be just this strategy, this method that I'm using. You can use any other strategy of your choice. Okay, I'm just using this as an example. So let's say you're waiting for that break of that trend line right here, right there. So immediately price broke the trend line, you could have entered the trade right here, and maybe your stop loss all the way down. Okay, so as price is moving up, as you can see, immediately you entered it went up and came down, so it formed this high right here. Okay, so after it formed this high right here, then this is definitely after the break of this high right here, that is when you should be looking for your buying opportunities to scale in. So at this particular point, immediately your price was breaking it, you could have placed your entry order right there and stop loss below the previous higher low. So the previous higher low in this case is this low right here, so place your stop loss right there and your target all the way to the upside. So let me just remove that so that you can have a better view of it, because it's kind of blocking. So you could have added your buy opportunity there and place your stop loss just above there. Okay, so entry right there, stop loss right here under the previous higher low, and targets all the way to the zone that is above here. So again, as price was going up, immediately you entered, it formed this high right here. So we have this high right here. So this is also another area where you could be looking to scale in. So immediately price broke it. So at this particular point it didn't break it, so you should be patient enough to wait for price to break it. Then at this particular point it broke above it. So at this was also another area to look for your scale in, for your scale-ins. So immediately price broke it, you could have placed your order right there, and in this case the previous higher low is this low right here, so you could have placed your stop loss right there. So entry right there, stop loss right there. So again, as price is moving up, you are just adding more and more positions onto the trade. So here we had this high right here, so immediately price broke it, you could have added your buy position right there and stop loss below the prior higher low. So the prior higher low is this one right here, so stop loss just below it. So yeah, that is how you scale in. So here I don't think this is not a good scaling opportunity right here, because as you can see, it's really close to your target potential, your target area. So even if you could have scaled in right here, there's nothing that you could have you could have made really little money in that particular scaling. So this is not a good one. So yeah, these are the ones that I've just showed you. These are the best scalings that you could have added onto this particular position, which we found here right at the break of this trend line right there. So that is how you scale in onto a trade. Okay, so this is an uptrend. The downtrend, on a downtrend, it's just the same. Okay, so let's say this example right here, this is a downtrend, right? So let's say price broke this zone to the downside, came back and retested it right there, and then let's say you look for your entry opportunity right there, right at this particular resistance zone. So let's say if you could have found your entry right there and then place your stop loss above the zone right there. So remember, as price is moving in your favor, you're looking for those breaks of the lows in order to scale in. So at this particular point, this was the low, you entered right there, price came and printed this low right here, so we have this low right there. So as price was breaking the low, could have, as price was breaking this low, you could have added your position right there and your stop loss right above the previous swing high, and the previous swing high or the previous lower high is this area right here. So you could have placed your stop loss right above it. So again, right here, price formed a low, and after forming the low, it came back up and then broke it to the downside. At that particular point, again, you could have added your selling opportunity right there and stop loss above the lower high right there. So yeah, so you just keep on doing the same thing, waiting for price to print those lows and then waiting for it to break the low, then placing your entry order right below it and stop loss above the previous higher low. So you do that until price gets to your profit potential area. Okay, so that is how you scale in on a downtrend, and also here, this is how you scale in on an uptrend. Okay, so again, if you have any questions, don't hesitate to ask in the comment section. So now that we know how to scale in, there is also something of very much importance that you really have to know, and that has to do with risk management. So remember, each time you are adding onto a position, each time you are adding those trades, each time you are adding the trades, you are putting more risk. Okay, the more you add, the more positions you add, the more risk you are putting onto that particular move. So scaling in is a double-edged sword. So what do I mean by that? What I mean by that is that in as much as you could make some really good amount of money out by scaling in, the trade could also go against you, and when it goes against you, you could literally blow your whole account on that particular move. Okay, so it is a double-edged sword. So because of that, it is very important to actually ensure that your risk is in check. It is very important to know how to manage your risk when scaling in, so as to prevent those situations where you blow your entire account or lose a significant amount of your account on those scale ins. So there are rules of risk management when scaling in. So I'm just going to mention them. So the first and the main rule of scaling in, when it comes to risk management is, when those scale ins should be at most half the position of the original entry. So what do I mean by that? So let's say, for example, in this example that I had just shown you earlier, so let's say you look for your entry opportunity right there, and you see an opportunity to scale in when price is breaking this high right here. So at this particular point, when price is breaking this high, this is a good potential to scale in. So let's say, for example, you risked 2% on this particular opportunity right here, the first opportunity. The scale-ins should be at most half of what you risked originally on the original entry. So if you risked 2% on this entry right here, it means that all the scale-ins should be at most 1%. Okay, so if you risk 2%, then when scaling in, it should be at most 1%. Here again, at most 1%. Here again, at most 1%. And also here again, at most 1%, all the way to your take profit. The reason for this is to ensure that you are keeping your risk in check, so that in case price goes against you, you are not going to lose a significant amount of your account. Okay, so it is very, very important to do this in order to ensure that your account is safe at all times when you are risking. Okay, so again, remember that losses are a must, and since they are must, the best thing that you can do is just minimize them. Okay, so you can minimize the losses or the risk by ensuring that you are risking, or by ensuring that on the scale ins you are risking at most half the original position, in order to ensure that when you're losing, you're actually not losing that much amount of money. So that is the rule that I wanted to show you, and it is very, very important. And when it comes to trade management, you can use whatever trade management strategy that you do have. Personally, I have my own trade management strategy, which I actually did a video on that a few days ago, so you can go and check it out. I'll link it in the description. So yeah, trade management, you can use any particular method, and in case you don't know how to manage a trade, just go ahead and check the link in the description. So that brings me to a close of the video. Hope you enjoyed watching it in as much as I enjoyed making it. So go through it over and over again until you have mastered everything that I have taught, and then go ahead and practice it on demo before jumping onto the live chats. So in case you have any questions, again, don't hesitate to ask in the comment section. I'll be more than happy to reply to you. So otherwise, have a good trading week, and also have a good life. See you in the next video. Peace.